Well, folks, the stock market has crashed. First off, welcome into today's video. Now, I want to cover something right off the jump here because I know there might be somebody that comes across this video and they're not very in tune with what's going on in the market, right? And they're going to say, wait a minute. The stock market, it's only down like 3% from all-time highs, right? Well, let me put it to you like this, all right? Let's say I ran a jewelry store and I, locked the jewelry store up one night. Go to bed, come back to my jewelry store, and what do I know? I open up the door, shut off the alarm, and I look and I say, oh, the jewelry's gone. There's no jewelry in the cases. There's no jewelry in the safe. I'm like, oh my gosh. Well, I couldn't have got robbed, right? Because the alarm never went off, but the jewelry's all gone, so must have just disappeared. That's the equivalent of the stock market right now, where if you look at the index, it looks like everything's fine, right? The index is kind of like the alarm system. Doesn't mean you didn't just get robbed, right? And the stock market didn't just truly, really crash. When we go ahead and we look at the data here, the number of NASDAQ stocks down 50% or more is at almost a record high ever. And this was basically at the end of December. It got a little worse from here, essentially. So basically, as far as NASDAQ stocks down 50% or more, it's the worst it's ever been, right? 40% of indexes firms have fallen by half from one year highs. Like, that's extraordinary. Over two-thirds of NASDAQ stocks have been in bear market as of Monday. Think about that for a moment. Over 67% of the NASDAQ stocks in bear market, meaning they're down 20% plus from their highs. And you have a record amount down 50% or more. That's extraordinary. That's going through a crash right there. Look at this. This was as of December 13th. It got a lot worse after this, right, over the past month. 39.1%. That's how much the average NASDAQ stock is down versus the index at that time was only down 3.6%, right? I mean, look at the NASDAQ 100 average, 16.6%. S&P 500 average, 11.7%. Small cap 600 on average, down 22%. So once again, we have gone through literally a stock market crash. It's just the masses haven't really noticed it because the indexes, the biggest of the big companies, they held the whole thing together, right? In reality, what has happened over the past 1 year? 5 things have happened. Most growth stocks have been destroyed. Number 2, meme stocks have been destroyed. Number 3, small cap stocks have been destroyed. Okay, that one's the loudest of the loud. Small caps, I mean, good luck trying to find small caps that have done good. It's, 99 out of 100 small caps that I tracked have just been absolutely devastated over the past 1 year. Number 4, most mid caps have been destroyed. And then number 5, most super caps have actually held up pretty good, right? Most of those super large caps they've held decent. And that's why the indexes have looked pretty respectable, right? If the small caps got represented and the mid caps got represented the way you would think, the indexes would look massively off of where they're at essentially right now, okay? Before we get into what I think is going to transpire here, we got to answer a very, very important question to really understand this. And in order to understand where we're going over the next year, we've got to understand how we got to this place where we're at right now. Why did things play out this way, right? Well, reason number 1 of these 3 reasons is say bye-bye to the retail investors. They all left the market throughout 2021. And if you want some data behind this, right, and I'm somebody that, it's because I'm on YouTube, I get to see retail investors come and go and who's going to stay in the market and things like that. The only people left in the market now are people that really, really care about stocks and really, really care about stock market investing and building their wealth in the stock market. All the tourists that were involved in the stock market, those folks went by. Don't just take my word for it. Somebody that does these videos every day and has massive communities I built. Take Google Trends for it, okay? Go ahead and type in stocks into Google Trends, and what you're going to find is basically since the end of January, things have tanked and tanked and tanked and tanked, okay? And like I said, all those folks that were involved in the stock market, they're long gone now. The only people we have left at this moment are literally like the people that are in this for the long game. Now, why did so many retail people come into the market? Like, why was this so crazy during that time, right? It's a very, very important question. We got to ask ourselves, why did this happen? Well, stimulus money was pumped out there, so folks had some stimulus money and maybe not that many options to spend stimulus money. And remember, a lot of the economy was shut down at this time, so it was like, hey, let me go ahead and start a stock market account. Number two, people that got in the stock market, which was a lot of them in the back half of 2020, had a ton of success. So it led to this overall enthusiasm because people are getting in and making 20%, 30%, 40% of their money quick, right? And so people are like, oh my gosh, the stock market's the best thing ever. Plow the money in. And they tell them family, they tell them friends over the holidays, right? And so everybody pulling out their Robinhood account, right? Oh, look at my Robinhood account, man. I just made $2,000 off Tesla stock, off this stock. People are like, oh my gosh, right? So imagine how many of those holiday dinners, people were saying stuff like that at that time. And we reached that peak in January. And ever since then, if you look at any terminology, it's just been down and down and down. Robinhood, stock market, anything like that. We peaked and retail then said, bye-bye, and they all left the market throughout the year. Like I said, except the most core people that are really in this for the next 5, 10, 15, 20 years. And at that time, there was a lot of people that were in the market that weren't in this for the long term. They didn't really care about stocks. They just looked at it as, oh my gosh, I heard there's some easy money to make over there. And shoot, if I went to the middle of Manhattan and just started sounding, hey, easy money over here, and I'm just throwing out money, what do you think? A bunch of people are going to come around me, catch the money. It's going to be a little popular. And that's what happened in the stock market, right? So that's first part here, why this happened. The second reason why so many stocks fell massively is inflation. Now, generally speaking, you would think inflation's, usually good for stocks, good for the market, right? Well, in many of these stocks' case, it actually hurt them. At least some of this, it hurt the actual businesses, but some it hurt from a perception, right? Inflation reached 7% in 2021, which was off the charts. That's the highest inflation gain since June of 1982. Since 1982. That's extraordinary. And so a lot of folks look at this and they say, oh my gosh, okay, inflation's going crazy. This is going to hurt small caps earnings, right? And even mid caps as well. And so they look at it and they say, well, Apple and some of the big companies, Microsoft, they can fight off inflation, so they'll be fine. Google, other companies like that, right? But in terms of all these mid caps and small caps and a lot of these heavy growth stocks, they're going to get hurt, right? Like I said, some of that is true. Some of that is just more psychological, people getting tricked. And then you tag on supply chains messed up with inflation. It causes even inflation to go up more, right? And so inflation definitely caused a lot of these stocks to drop. The third reason, very important, is the stock market is irrational. You got to remember this, okay? Think about it. If we go back a year ago, what was the stock market? Irrational. We know, like if you had been a super experienced going into that, you saw the market in January 2021, you said, this is irrational. This is not normal. The amount of enthusiasm in the market, the valuations these stocks were going to with so many years to catch up to them, you knew the market was irrational. And just like last year the market was irrational, now we flipped on the other side and the market's irrational, and it's pushed many of these stocks down to very, very undervalued valuations now. And you got to understand this happens in the market. So you're going to get time periods where the stock market is just really irrational and the stock market doesn't always make sense. It's important to remember that. Over the long term, it does. Over the long term, companies will be valued the way they should be valued. But in the short term, companies will be valued however the heck the market wants to value it. It might make no sense. It might way overvalue a company. It might way undervalue a company. And as an individual investor, that's where our true opportunity is. When we can see there's this stock over here, it's extremely undervalued, and we buy. And if it goes down more, we buy the dip and we buy the dip. If it goes down 10, 20, 30% from where we started buying, that's fine. We buy because we understand where that company's going over the coming 3 years, 5 years, 7 years. And then if we're right on our bullish thesis and the company's fundamentals play out, the company gets rewarded, the stock gets rewarded, and we make a bunch of money, okay? And so it's kind of a beautiful thing, but you got to understand the stock market is irrational, right? Now, let's get into what is going to happen now, in my opinion, in this stock market going throughout 22 as we move throughout this year. Okay. So first thing happens, it starts in 48 hours from me recording this video. And what is about to start is earnings season. And this is the most important earnings season of the entire year. The reason this earnings season is so important is, one, people want to know how that 4Q was, the Christmas quarter. People, the market has been, I don't want to say closed down, but you got to understand, in the holiday season, you got Thanksgiving, you got Christmas, you got New Year's, the market kind of goes away a little bit, right? A lot of fund managers, a lot of high net worth individuals, they take vacations, they kind of unwind, and they start coming back in kind of the middle of January, right? And start kind of getting back into action. And during this time period, a lot of these folks are wondering, how are these earnings? What's going to come out of these companies? And so it's very important you get those numbers. The second thing is, there's not a lot of news usually coming out with companies in December and into the first part of January, because a lot of these companies don't have any massive news to announce during that time. And so we finally getting out of this quiet period of these stocks where it's the problem is, when you're in a market that's kind of downtrending, when 2/3 plus the NASDAQ stocks are in bear market. When you're in that sort of market, the last thing you want is quietness. You don't want companies that aren't talking, because people start feeling even more uneasy because they're like, I haven't heard anything. There's no news. Oh my gosh, they haven't had a press release in a month or 2 months or 3 months or whatever, right? And so just getting something out there is like a breath of fresh air. There's a conference call. By the way, earnings calls, about to be earnings season. Make sure you download the Hungry Bowl. That's my app where you can listen to earnings calls of all your different stocks right inside the app. Very important to download that, okay? The third reason this is so huge in this particular earnings period is most of these companies go ahead and they give their 2022 guidance. Revenue guidance, EPS guidance, gross margin guidance. This is so key, guys, because these companies here, whatever they guide, it's going to likely drive their stock in the short term, and it's going to drive the markets in the short term. And investors want to know, analysts want to know, what are the revenue projections for this year? What's the EPS projections? What's the gross margin projections? Are we going to be on the low side? Are we going to be on the high side? Are we going to be where analysts are expecting these companies to be? This is so dang key. And so this is the most important earnings season. If this earnings season goes very well, the earnings are strong and the guidance is strong, be ready for stocks to start to rally throughout the end of January and into February. Be ready for that. Now, at the same time, if all these earnings are trash, which I don't think that's going to happen based upon holiday sales and everything I saw, I think these earnings are going to be good. But on the flip side, if the earnings are trash, if the guidance is weak, then you got to be ready for the market to obviously drop. That's not something I'm planning for. I think a lot of these companies are going to report really good earnings. I think they're going to have really good guidance, really healthy guidance. I think a lot of these companies are going to come in and end up actually guiding for maybe even revenues to be better than expected. And keep in mind, this is very, very important with these companies. Many of the smartest companies will likely slightly sandbag their numbers. And the reason a lot of companies like to do that, right, is so they can go ahead and they can beat numbers throughout the year. Because if you know the game of Wall Street, the game of Wall Street is beating your numbers. The last thing you want to do if you're a CEO of a company or an executive of a company is miss your earnings numbers, right? It's devastating many times for your stock price, the way investors view it, the way fund managers view it. And they say, oh man, I don't know about that one. They just missed their revenue. They just missed their EPS. So I think a lot of these companies could end up beating, but still sandbagging a little bit for the year overall. Okay. So nonetheless, this guidance is going to be really, really important as far as these companies' earnings. And like I said, the big earnings start in 48 hours from now. And then next week, they really start getting rolling in the last week of January into the first 2 weeks of February. Be ready to just have a bombard of earnings coming at you, because it's going to be ridiculous. All right. Next thing I want to talk about here is Jamie Dimon. So Jamie Dimon, he says, if we're lucky, the Fed can engineer a soft landing. Expect more than 4 rate increases in 2022 and a lot of market volatility. Okay. So I love this. Okay. The reason I love this, somebody like Jamie Dimon, CEO of JP Morgan, and I love that many investors and a lot of folks are now expecting 4 rate hikes or more this year. The reason this is so key is I think the worst case scenario is being priced into the market already when it comes to these stocks. And what will likely happen is they'll maybe raise 4 times, or maybe they raise 3 times or 2 times throughout the year. So now I think we're set up in a situation where regardless, we're not going to have more rate hikes than folks expect. If we had more rate hikes than folks expect, that would be something that could really like shake up the market, right? But I think as the year goes on, this inflation is going to come way down, way down. And I think it's possible we even get into deflation or very, very low amounts of inflation as 22 goes on, because it's going to be so hard to hit those year-over-year increases, okay? That's what's very important. People are like, well, maybe the price could go up a little bit. But yeah, it's about the year-over-year increase. That's what's very, very key in this, okay? And so I think as we go throughout 22, inflation comes down, there's less of a need to raise interest rates in that sort of environment, right? And like I said, I think we're already priced in like there's going to be 4 or more rate hikes this year. And so if we have less than 4, now we're in a situation where, that's actually a bullish thing for the stock market and there's not as much fear. If we were, let's say, the thing that would scare me is if we were in a scenario where folks were like, we're only going to have 1 rate hike in 22, and then we go on to have 3 or 4. That would be a shock to the stock market. That would send stock prices likely plummeting down, and many valuations plummeting down in that sort of situation if there was way more rate hikes. So that's actually something that's really good. I really like that. And right now there's a consensus kind of out there from a lot of investors, even including Tom Lee, who goes on CNBC all the time, and he's somebody that is, insanely bullish, right? He's like, I would call him super bullish, a super bullish guy, right? A perma-bull, even more bullish than I am, and I'm a pretty bullish guy usually, right? And he even expects the first half of the year to be kind of rough sledding. I think that's something else that's very good when you even have people that are kind of perma-bulls saying, I don't know about the stock market in the first half. That makes me actually feel much more comfortable in this sort of market. The market I don't feel comfortable with is one where everybody thinks everything's going to go up, let's say, in the first half of the year. That would a little bit scare me, because I'm like, if everybody's already thinking that, everybody's already likely placed their chips certain ways. Now, if we go the other way and people haven't really placed their chips because they're like, I'm not sure about the first half of the year, and then it starts going a certain way, and then stocks start going up, and projections start coming in great as far as revenue projections for these companies, earnings projections, and then next thing you know, as upgrades start coming, you get all this positive momentum. All of a sudden, people got to flood their chips in, right? And it's like, hey, now we're already in this positive cycle, and now people are starting to really, really get involved, right? So nonetheless, I think this is actually really, really good, okay? Next thing we got to talk about here, this is very, very important, the morale of the stock market. So morale, I don't know if you ever heard that term before, but usually if you work for a company, you'll hear like, hey, what's the team morale? Or if you play a team sport or something like that, like what's the team's morale? And basically what it means is like the spirits of the team, like, how confident are we? Are we feeling good about ourselves? Are we feeling good about the company or the team or whatever we're doing, right? Or are we feeling kind of down and out and bad and those sorts of things? So there's a morale for the stock market, right? And like I said, I started my YouTube channels in 2016 and obviously built really big channels. And I always read through my comments because I'm always trying to gather like morale. What's the morale like in the market, right? I have a huge Discord group. I have my private stock group. And what I'm trying to gauge all the time is the morale of investors out there. And especially like different stages of investors. Like what's the high net worth individuals? Because I have a lot of those like in my private stock group. We have over 100 people in there with over 7 figures in the market. Like what's their morale? What's the person that maybe has $700 invested in the market? What's their morale right now? What's the in-between? What's the, let's call them the middle-class investor that has 10,000 or 100,000 in the market? What's their morale like? And I'm trying to gauge these things all the time. And what I see is right now, I think we're at a low for morale, especially in the mid to low tiers. What I'm noticing is actually morale pretty high with the higher net worth folks, like the 7 figures and up. A lot of those folks seem like they're actually in a really good place and actually much more comfortable right now in the market than they were last year. Guess what? I'm also a high net worth individual, and I feel that same exact way, that I actually feel way more comfortable in the market right now. My morale is actually extremely high, despite a lot of stocks I've been buying for the last several months being extremely low. My morale is very, very high because I know this just means I'm going to make even more money as I get to buy these stocks and accumulate these shares for such cheap prices, right? And where I think these stocks are going over the next 3, 5, 7 years is, obviously massively above here, right? So my morale is incredibly high, but the majority, I would say the morale right now extremely low. If we go back to January 2021, we had all-time high in investor morale from the majority of folks, right? Because a lot of folks got involved in the market in the back half of 2020, invested, made a bunch of money. January was pumping, and folks just felt like, oh my gosh, so the stock market's such easy money, we're going to make so much money. And as the year just trickled on, they just got devastated more and more and more and more and more until today, when I'm recording this, January 12th of 2022, right? And I would say since I've been, had these public forums and whatnot, and this public, being in the public and getting to see all this, I would say since I've been doing this since 2016, I would say investor morale is at an all-time low right now. So that's how fast we switched up. In a matter of 12 months, it went from all-time euphoria in the market, all-time, incredible morale in the market, and everything was just great and grand to, now if the stocks even go up, people are like, it's just going to go down more. Who even cares? It's just going to go down more. Here, for a while, there was kind of like, if a stock went down 5-10%, something, it was kind of like, oh, no, it's going to bounce back. It's going to bounce back. It's going to moon. And then as time just ticked on and it didn't moon and it didn't go up, people are just down and out now. And like I said, since I've been doing this, investor morale is at an all-time low from what I've seen, okay? Now, my morale expectations for the next 12 months go something like this. Right now, we're at an all-time low. I think we're going to stay low as far as investor morale goes for a while. Because even if, and I think this is possible, that stocks could start to rally, especially a lot of these, beaten down dog stocks could start to rally throughout the back half of January and into February. I think even if that scenario plays out, I think morale is going to stay low in the market. And the reason being is a lot of folks still down on these stocks, and when you've continually beaten down on these stocks, a lot of folks are going to figure, it's still not happening. It's going to take a while before morale comes back in any meaningful way. It could be till like the summertime, to be honest, before people start to actually feel some level of confidence. And then I would say by January 2023, we'll probably be somewhere in here roughly as far as morale goes. Meaning we're not going to be anywhere remotely close to where we were in January 2021. But I think we are going to be in a much better place as far as overall investor morale than where we're at right now. Let's put it that way. It's just you have to have some positive momentum really start to get in these stocks. Some of these stocks start to go up, and people to actually start making some money again and consistently for a good amount of time, where people can actually start getting some, oh man, maybe we are going to win a game here, right? Because right now it's just people feel like we're just going to lose every game, right? And they feel like, even if we get up in the game, we're going to still lose it anyways. That's the way people feel right now. So the way I view it is January 2021, January 2022, we're both in an unhealthy market, right? My wife was watching some documentary on fast food here on the TV, and it was just funny because I got the kind of the idea of being healthy and unhealthy, right? It's like you could eat fast food all the time, super unhealthy, never exercise, and get super overweight. That's unhealthy, right? On the flip side, you could never eat, and you're just bones, and that wouldn't be healthy either, right? There's kind of like two unhealthies. And the same thing in the stock market, where there's these two unhealthies. Last year we had a very unhealthy market because euphoria was through the roof, morale was at an all-time high, and this year we're in a very unhealthy market, in my opinion, because there's no morale in the market for the most part. Most people are just down and out. And that's not a healthy market either, right? So we've had literally back-to-back Januaries that are unhealthy, very unhealthy. It's just they're two completely different markets. That's very interesting. In my opinion, at this time next year, we'll be in what I actually expect to be a healthy market, where morale is going to be somewhere in the middle, which is where it should be. You shouldn't be off the charts like everybody thinks every stock's going to the moon, and you shouldn't be down and out where people are ready to give up and say, oh, the stock market's a scam, you can never make money in these stocks, these are all bum stocks, right? So in my opinion, what's going to happen throughout the year is a lot of these stocks are going to start coming back and keep coming back. There will be volatility, there will be drops and those sorts of things. That's a normal market. But overall, we'll trend strong throughout the year. And a lot of these stocks that have been just devastated are going to come back to life. And like I said, the morale will get to a very healthy place by the end of the year. The markets will get to a very healthy place by the end of the year. Small caps will get to a much, much better place than they are now. You're going to see some money money rotate from some of the large caps into some of the other large caps that have maybe lagged a bit. You're going to see some money go from some of the large caps into some of the smalls and mids, and you're going to see some money come back in the market that has been on the sideline waiting for things to kind of play out, right? And I think we're going to get the algos back on our side as the Rona numbers start to go down in a massive way, in my opinion. In February, the Rona numbers are going to start going like this. Like January, in my opinion, is going to be the peak. Rona numbers are going to go down massively. I think the economy is going to open back up for full by like late springtime around the United States, which we haven't been like that obviously since this whole deal's been going on, right? And I think more enthusiasm will come throughout the summer and kind of just throughout the year in general, and we'll be in a healthy market by this time next year. So that's my prediction, guys. That's what I think is going to happen here and how things are going to play out. Hope you enjoyed this video. As always, if you want the sickest options course ever, basically the masterclass, Hubert's masterclass, it's coming at the end of January, and if you want to check that out, check out first pinned comment down there to get notified as soon as we drop that. Much love. Don't forget to subscribe, and have a great day.